This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end-of-day futures trading video for Tuesday the 17th. So it's been about a week and a half since I've done a video. Here in Florida, the pollen is crazy. I've got really bad allergies, and this time of year it gets to be like allergy-induced asthma. And on top of that, had a vicious cold starting the beginning of last week. Thankfully, it wasn't anything related to the virus, but it's one of those things where every time you try to talk, you just start coughing. So there haven't been any videos for a while. But I know you didn't tune into this video to hear about my large Italian nose and the problems that come along with it. So let's talk about the trading. It has been an unbelievable couple of weeks of trading. Our systems are absolutely crushing it. I'll show you some of the numbers and some of the trades here in just a minute. Here's the takeaway, and this is being recorded in real time. You can see our day trading algo here, our swing trading algo over here. Right now, we're trading down to 85. I believe lock limit down is somewhere around 61, 23.61. Don't quote me on that. We had a couple of really nice long trades today. And forgive me if I coughed during this video. I'm doing the best I can. I'm not over this yet. On cue, right? But we had some really nice long trades. And we had one or two really nice short trades. We had a really nice short trade here in Globex. And that was, we got in that at about 78. Let's see, where do we get in that? Yeah, 78.50, and we'll show you that trade in a minute. But a couple of things that happened today. In my opinion, the reason we're going down right now in Globex is because there was way too much aggressive dip buying today. Every time somebody sees a little green bar, they think this is the big one that's going to move 80 handles. Well, some of these did. But you can see here in Globex, let me zoom in on this a little bit. Here's your Globex open, all right? Gets sold into immediately. And then here's this long green bar that goes from, 61 up to 83. Well, the problem with that is there are multiple algo pivots that were right up in here from 76 to 84. Now, this is the big advantage that the institutions have. And this is the big advantage we provide you if you're trying to trade these markets. We literally have the same algorithmic time cycles that the institutions are running on. And I'll prove that. I know I've proved this many times before, but I'll just give you a couple examples. Here's our midday pivot. Came out today. 74.96, call it 75. Okay. Where does this break down? Right there. Came down here towards the end of the day. Bounced up, and then boom, in Globex, you come through that, and then it starts getting nasty. Comes back up again, close to this, within a couple of handles of this 75, and dumps again. Now, that sends you down to where? This is what we call our spill window pivot. This is the pivot for the first hour of trading this morning. Where did this come down to in Globex? Came right down to this pivot. So this pivot that broke here, this midday pivot, that is one of the key algorithmic time cycles the institutional algos run on. It failed there in Globex. Came right down to another institutional algo pivot from this morning. I mean, it doesn't get any closer than that, folks. Okay, 24.99. It came right down to it. It bounces up to where? To the tick, to our daily bull bear pivot. Again, major institutional algorithmic time cycle. So it failed at an institutional algo time price pivot, came right down to another one almost to the penny, went back up again to another algorithmic institutional pivot, and it dumped again. And then it came down here and it went back up to this X5 pivot, which is again, this is from today, 36.22. Again, so here you have 1, 2, 3, 4 moves that absolutely were stopped dead in their tracks or reversed right at key algo pivots. Now, here's what the machines are telling us tonight. They're telling us the 2,500 is nowhere near fair value for the S&P. And 3,400 wasn't either. Look, I mean, you know, you've got many of the S&P companies working on reporting on non-GAAP accounting principles and adjusted EBITDA. Like, EBITDA in and of itself is BS. It's like you're saying, okay, this is the profit for my business if I don't count A, B, C, D, E, F, G. That's regular EBITDA. Adjusted EBITDA is, I'm not going to count A, B, C, D, E, F, G, and about 10 other things that I'm just going to make up each quarter for whatever reason. So maybe 2,500, where we were trading in today, in and around today, maybe 2,500 on the S&P is fair value for the S&P without the coronavirus in the mix. But it sure as heck is not fair value for the S&P given what's happening with the coronavirus. And I'm not so sure that fair value for the S&P, given the coronavirus, even has a 2 in front of it. It may be something below 2,000. So this is not surprising at all. When you have the kind of carnage that we've had, and the day traders start getting way, way too aggressive buying the dips, the kind of thing that we're seeing here in Globex is what you get. Now, look, we bought dips today because we've got all these algorithmic pivots to go on. We knew the spots that were going to hold. I mean, here's what we did today. So this is the trade in Globex, shorted 2478. And we put these trades on in contracts that are multiples of thirds. So that could mean you're trading 3 E-minis. It could mean, you know, if your account size is typically 1 E-mini, well, then instead of trading an E-mini, you trade 9 micros. It's got to be something divisible by 3 in order to manage the trade properly. So what we do is we take off the position in thirds. Now, because this market moves so fast, we take the first third off and then very quickly take the middle. In a normal market, you would take your first third off and, you know, you're trying to get 3, 4, 5 handles on your first third, right? That gets some of the risk out as soon as possible. And then you give the trade some time to develop and you look for a spot to take a middle. Well, you don't do that in this market. We look to take our middle as soon as it starts moving. So we got in this trade and it dumped. And so we took 8 on the first third, and within maybe a minute, we were taking our middle. So now there's 20 in the trade. And then what we did is we just moved the stop down. And it stopped us out at 44. On a short, we entered at 78. I hate that thing. That drives me nuts. On a short, we entered at 78. So that gives you 34 on the runner. The runner is the last third of the trade. So that gives you 34 on the runner, plus the 12, plus the 8. That's 54 on the trade. And that's a trade that we were in, I don't know, 40 minutes at the most. Okay, then here's the other trades from the day. So let's take it up to the top. First trade of the day. This was long entry at 36. That one we were stopped out on. We only made 7 on that. The next one, it was minus 13. And don't get freaked out by minus 13. We're not taking regular size positions. Because of the volatility, I mean, a normal stop in a normal market is 3, 4 handles. But because you have to set these stops so wide in this market, what you do to compensate and reduce the risk is you cut your sizing way down. So 13 handles on a third of what you would normally trade, contract size. Okay, you know, you literally have to give these things around 12 handles because of the movement. So plus 7 on that trade, minus 13, plus 10. So at that point we're up about 7 handles or 4 handles. Forgive me. All right, then this trade we got in, and I mistyped this at first. Obviously, we weren't getting long at 33.67. Those days are way gone. It was 23.67. So we got long at 23.67, took 5 on the first third, plus 5, plus 15 on the middle. This is what trade was entered at 23.67. We kept moving our stop up, and we were stopped out at 24.09. In at 23.67, out at 24.09. 5 on the first piece, 15 on the middle, 32 on the runner, that was 52. All right, then next one was a long entry at 24.14, 11.42. Plus 6 on the first piece. And actually, that's not the exact right time. The market was moving so fast that we were calling these out on the live chart, and we had to enter the details later. These are all actual trades in real time given to our subscribers on our live chart feed. But this one was a long entry at 24.14. We got out of this trade at 24.63, plus 64 on that one. And then this one was 60 handles. It was a long entry at 24.63. And then we ended the day with a short. We entered short at 25.26. That was up in here. And the reason we did that is on Friday, we had our daily bull bear pivot and our midday pivot right at the same price. So you come up here 3 times and fail. I mean, it ultimately came up 3 times, but this one here, we nailed this, and that was this trade here, short at 25.26, 5.5 on the first third, 15 on the middle, and we kept trailing the stop down, 50 on the runner. Now think about that. Short 25.26, out at 24.76, plus 50 on the runner, that was 70 on the trade. And then this one was in Globex. We entered short at 24.78, got out at 24.44, 34 on the runner, 54 on the trade. So what is that? 54, 70, 120, 180, 240, 270, plus a couple. 270. That's the kind of thing you can do. And look, I love fast markets. You just have to change the way you trade. You have to reduce your position size so that you're keeping the risk equivalent to what you would trade in a normal market. So if you're normally using, say, a 4-handle stop max, well, in a market like this, you size your position down to a third of what you normally trade because you have to give it 12 handles. Well, that ends up being the same thing. Okay? 12 handles on a third of your normal sizing is the same as a regular market where you're giving it 4 handles. Here's something that's troubling. You had our swing trade algo flip long at 11.48 and flipped back short this evening. That may be the fastest period of time that our swing trade algo flipped from long to short or vice versa. One of the interesting things about these algos, because they're built on price predominantly, or on time predominantly, and to a small degree price, movements in price that are just one bar, don't trick this thing. Because the time component is so important, it has to trade at higher prices, for example, over a period of time. Well, here's the whole point. If you get a flip, either long to short or short to long on our day trade algo in typically, say, 2.5 hours or less, that would be considered a fast flip. And when our algos flip quickly, either long to short or short to long, you got to get out of the way because the direction that it flipped to, that second direction, is going to be fast and it's going to be nasty. Now, on the swing trade algo, because this is a much longer time cycle, going long at 11.48 and flipping a couple hours into Globex, that is a fast flip. And that's what gives you this move down. I couldn't tell you what the rest of this week is like, but I'll tell you we've been absolutely crushing it. And I want to show you that the plus 270 today. Here's yesterday. I have to scroll in the correct direction. Plus 47. Well, there's only a couple of trades. Plus 47 on our last trade. This one was a minus 7. And then the other trade was plus 62. So plus 62, plus 47, and there you had a minus 7. So, you know, you had over 100 on these two, and you throw in a minus 7. And last week was no different. We were booking these kind of handles last week. So, look, if you're concerned, I don't want to use the word scared. Trading is nothing to be scared about. There's a lot more things in life that are more threatening than trading a fast market. But if you're concerned about trying to trade these markets, we can teach you how to trade them. We have the same algorithmic metrics the institutions have. And we teach risk management better than any trading service you're ever going to find anytime, anywhere, period. In this game, all comes down to risk management. You could have the best metrics, the best algos in the world. If you don't know how to manage risk, you're going to get crushed. And conversely, you know, you can trade without any metrics at all. If we had nothing on this chart, we could trade this chart with proper risk management. And so we teach risk management as good as anybody anywhere. Let's take a look at bonds. That's ES. Let's switch it over to bonds. By the way, if you haven't been to our website, it's mercurysignals.com. Mercurysignals.com. Let's take a look at bonds. Bonds are not supposed to trade like this. And I don't want to get into all the myriad things that are wrong right now economically. But I've been trading for 35 years plus, and I've never seen anything like the volatility we're seeing in bonds. This looks like a 3-minute chart of NQ. This is not the way bonds are supposed to trade. Now, our bond algo got short this morning at 11:30. Not only did the algo trigger short, actually, let me follow this back. It actually went short back up in here, right there at about 180.22. But here's today's bull bear pivot, 179.25. You can see that broke. Here's today's midday pivot, 178.23, broke, came back up. And again, look, you can't. If these weren't the exact algos the institutions were trading on, you could not have these moves precisely up to these pivots. This bull bear pivot is put out at 8 a.m. Eastern time. We do it for ES, for NQ, for bonds, for crude, for Apple, excuse me, Apple, Microsoft, and SPY. You could trade the tar out of SPY options or SPY just with the daily bull bear pivot and midday pivot we give you. But this daily bull bear pivot, this comes out 90 minutes before the RTH open for ES. But look at how beautifully it trades up. It trades up to this, fails, comes up, fails, comes up a third time, fails, and then subsequent to that, when your midday pivot gives way, it gets smushed. Not smashed, but smushed. For me, smushed is a more severe conjugation of smashed. This was smushed. Smushed. Okay? And you can see how beautifully it trades on these retests. Fails here at one of our Mercury bands. Comes down, comes back up to another Mercury band, fails. Comes down to another Mercury band, finds support. Comes up to another one, fails. This is completely by the numbers. Now, this regression line here, this is a big deal. If this does not hold, on a scale from 1 to 10, it's not good. It's not the move down in yields that that breaks things, although it indicates there's something wrong. It's the move back up in yields. So bond prices up, yields are down. Bond prices down, yields going back up. And that's what will break. Look, the bond market is saying, you know, the bond market is saying, fine, you want to throw trillions of dollars at the problem, go ahead. But it's going to cost you more to service the debt. That's what the bond market's telling you. And this algo regression line, now you go way back here and you see where this regression line comes from. When you were at the high at 191, this regression line was down here at 169, slowly moving up. And I mentioned, go back on one of the older videos, I mentioned when it came up here, I said this regression line will get touched. It's slowly moving up. It will get touched, and it did. It got touched today at 171. 20 big handles off the high. Are bonds supposed to move 20 big handles in 2 weeks? No. But you can trade the tar out of bonds with our algo. And everything is one membership price. ES, NQ, bonds, crude oil. The bonds and the crude oil used to be a separate membership. We've combined them together and kept the price the same as what they each were separately. So now we give you both of them for the price of just one. You have ESNQ, and then you also get the bonds, the crude oil. And so you get 2 live charts. So all you need is an email address. You set up a free Zoom account, and each day we give you a code, and this is what you see. Now, we've just got the day trade algo and the swing trade algo here. We've got 1, 2, 3, 4, 5, 6 additional indicators at the bottom of the screen on the live chart that you see as a member. And then just like we have the ES and the day trade algo for ES and the swing trade algo, we have a separate live chart that has bonds on one side and crude oil on the other. And so all you need is just 2, for Zoom, you just need 2 separate emails, because with Zoom, you can't be running 2 meetings concurrently with the same email. So since we give you both the ES, NQ, and the bonds crude oil, we give you the code for each of those live charts. You just have to have use 2 different email accounts. Maybe use a Gmail and an Outlook account, whatever. But 2 Gmail accounts, it doesn't matter. But that way you can see the ES, NQ, all those metrics, and see the bonds and crude oil. So to wrap up, let's take a look at crude. Are we still using crude oil to power stuff? I'm not quite sure. How's that ESG thing working out for you, huh? You didn't think there was going to be carnage by deciding that, we're going to be politically correct and leave the crude oil in the ground. How's that working out for you? I promised I would not use the word moron on this video. But if you set out to do as much damage as you can to financial markets, decide you're not going to use crude oil anymore. Leave it in the ground. I mean, I'm done. Look, build windmills, and I know I'm probably stepping on some toes here. Too bad. I'm honest. Take the cost of a windmill. In the life of that windmill, it's not going to produce enough energy to justify the cost. So let's leave the crude oil in the ground. Let's build windmills. We'll attach a windmill to every car. It'll be a beautiful thing. So, even aside from the Russians not coming to terms with OPEC, look, this ESG investing was going to cause a problem anyway. I don't want to get into the whole thing of why. I've got some very sound reasons why I believe that whole nonsense started, but it was just stupidity squared. You take a dumb idea and then you double down on it. That's ESG investing. Are they doing that in China, by the way? Are their companies subjected to ESG investing? No? Okay. I was just checking. So you had crude trade down here to 26. The crude algo, and look, it'll pick up some of these moves, even in a downtrending market. If it wants to go higher, the algo will pick it up. It got long here at 29 and had a nice move up, above 30. And then the algo flips here, 29, and now we're trading 26. So, you get a state-of-the-art institutional bond algo. You get a state-of-the-art institutional crude oil algo on top of what we give you with ES. So if you haven't been to our website, it's mercurysignals.com, and that'll take you to our hosting's on WordPress. We originally registered our domain with GoDaddy. It just ran smoother on WordPress. So that'll take you right to the site. Now, what I would recommend doing, go in here on our website and go into weekly reports. I did have an opportunity to write a weekly report this last weekend, and didn't have a chance to do one the weekend prior either, just due to some family things that were going on. But take a look at these weekly reports. This one, all about the math, January 25th. This one, triple threat, back on January 12th. We were talking about the problems back then. Jekyll and Hyde, January 5th. Dangerous cycles. Go back and read these. If there was anyone who was more accurate earlier than we were, I'd love to know who. This was an important one, February 8th, calm before the storm. Multiple times in early February, and our subscribers can vouch for this because I said it so many times it's ridiculous. In early February, I said by the middle of March, no one will want to own stocks. Early February. And why? It's because of stuff that happened starting on January 22nd. We were short January 22nd. We were short January 24th. We were short January 29th. We were short the opening of Globex January 30th. Go back and look at those days. For most trading services, that's a year's worth of gains, if not more, in a week and a half. But go to our website and just click on weekly reports. You go back and read these, and you tell me if there is anybody who is more right earlier about this, because our systems are as good as anything out there, institutional or otherwise. They just are. So if you want to take a look at our website, you can look at information about our ES and NQ algos, our bond algos. You can read those weekly reports. There's a bunch of videos in here. There's all kinds of information on the home. There is a ton of information on our website. I guarantee you that it's rare to find a trading service. In fact, I have never found a trading service that puts this amount of information out there for free for you before you commit a dime. Usually it's, we did this, that, and the other thing, and sign up and you'll find out whether it really works or not. There is a just massive amount of information on our website. And if you're interested in subscribing, you just click the subscribe page. But it's, there are people that advised us not to put this kind of information out just so as not to give too much of a look under the hood at what we do. I don't care. Nobody will ever duplicate what we do because there are too many disciplines combined into this. Lastly, on our subscriptions, we are to the point where we're going to have to start severely limiting space. So it's deeply discounted right now. We bill biweekly. It's $138 a month. And if you're watching this video a month from now, it's not going to be that price. But you get the ES, the NQ, the bonds, and the crude oil, $138 biweekly. Here's why we bill biweekly, by the way. Because our stuff is better than anything else out there. we don't have to bill people monthly, because you know what really stinks is you subscribe to something and you find out a couple days into it you don't like it. Well, you've already paid for a month. You don't do that here. You get the annoying pop-ups. You get all this billed bi-weekly. Also, from the time you subscribe, we give you a lifetime rate lock. So you're insulated against any rate increases going forward. But, you know, I just felt it was the right thing to do, to bill bi-weekly and not monthly, just as a sign of good faith that everything we say we do, and much, much more. So that's going to be a wrap for tonight. Again, if you haven't been to our website, mercurysignals.com, we thank you so much for your time. It's a minor miracle I made it through this without coughing a dozen times, but thank you so much for your time. We appreciate you taking a look at this. We'll try to get back on a regular schedule of videos each evening again. But thank you so much for being here. God bless you. God bless your family. And we hope to see you again real soon.